All right, Evan, why don't we switch gears from talking about a business that you and I are both not super fond of, though fascinated with, to a company that we love to talk about, and that is Apple. It would not be an Apple earnings show without Evan New. You are our resident expert. Company put out numbers this week. Pretty strong reaction from the market. They seem to like what they saw.
Yeah, I mean, the total revenue is down about 5% to $58 billion. The iPhone was the biggest drag on that top line. Revenue from iPhone was down 17% to about $31 billion. But I think the market's been kind of expecting that and pricing it in. So it's not really all that surprising, particularly when you think about what's happening with the smartphone market globally. I mean, worldwide unit volumes are starting to kind of come down a little bit. The market's matured, volumes have peaked. And in particular, the premium end of the smartphone market, where Apple primarily plays, is getting hit the hardest. So, I mean, even though they don't disclose iPhone unit volumes anymore, we're getting some third-party estimates that think that iPhone units probably fell somewhere between 20 and 30%.
Yeah, and that's tough to overcome when the biggest contributor to your top line is a business that's struggling. Part of the problem with them, too, is, one of the big growth opportunities for them with the iPhone was China. That market has stalled a little bit. We aren't seeing some of the growth that we have seen there historically. And when people don't have the wage growth, the lifestyle growth that they're expecting, a lot of the premium products are going to suffer.
Yeah, and the local brands in China are doing really well. Like Huawei, their units were up something like 50% last quarter because they're putting out these really good phones at really affordable prices, and that's really resonating. Whereas Apple, I think they lost something like 30%, their units went down something like 30% in China, according to some recent estimates. So, they're definitely losing quite a bit of share there, but at the same time, Apple's trying to pull certain levers to try to grow that business again, and I think there is some signs that it's working, which we can get on when we talk about their guidance. Yeah.
I will say before we move over there, hardware wasn't all bad. We saw some good numbers out of the iPad segment, 22% growth. It's still only about $5 billion at the top line, but that is the strongest growth we've seen there in, I think, 5 or 6 years. Wearables Home also did pretty well. Same number there, about $5 billion contributing to the top line. We can talk about hardware all day, though. What Apple really wants us to focus on is the services segment, Evan.
Right. So services, as they've been really hammering this services narrative for a couple of years now, hit a new quarterly record of $11.5 billion. On a trailing 12-month basis, services now up to about $43 billion. So they're right on. They are on target to hit this $50 billion number in 2020 that they put out a couple of years ago. That's very much within reach at this point, particularly when you add in these new services that they introduced last month. You have News Plus, TV Plus, this Apple credit card, and a subscription gaming service, and Even every past 6 quarters, they've been adding 30 million paid subscriptions. So at this point, they're up to 390 million. And in January, they set a different target, saying, "Hey, we're going to hit 500 million paid subscriptions at some point in 2020." So even if you assume no acceleration, maybe from these new services, that would be 120 million more subscriptions over the next year. That puts them well over 500 million. So on that target too, I think they're really executing pretty well on growing the services business, and really trying to convince investors why they should care, and also putting up the numbers to back that up.
As an investor, I care, because that is high margin revenue that is coming in, and I'm happy about that. You think about having 500 million people paying something, to the company, and that really just builds out the ability to add stuff down the road. If they start adding more services, if they build out something on the streaming side, who knows? That creates the market and the appetite for a lot of that stuff that they can just tack stuff onto, especially once people are in the habit of paying Apple or going in through the App Store or what have you, to add stuff, to whatever hardware they're using.
And to your point about profitability, gross margin on the services business did tick up a little bit on a sequential basis, but at the same time, I think that you don't know where that's going to go in the future, because each of these services has a very different margin profile. I mean, this video stuff is going to be so expensive to buy up and develop and produce all this original visual content, which we know is so expensive from looking at companies like Netflix, for example. And so each service is totally different, but that number is still overall, I think, heading in the right direction.